The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Hope you're having a great day wherever you are around the world, East Coast, Midwest, West Coast. Again, the name of the show is Breakout Investing, every Tuesday and Thursday on TFNN from 3 to 4 Eastern. Number to use to call if you want to talk to me about stock market in general, 877-927-6648, toll free. You can get my show as a podcast on iTunes if you can't listen live, and you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. I'll be going over charts on the show today if you want to look at those charts right along with me. And you're at your PC, be sure to tune into Tiger TV, Channel 1. The show is carried live. It's archived in Channel 13. And you can also watch Tiger TV on your smartphone now. So be sure to check that out as well. All right, taking a look at the market today. Dow trying to end its six-session losing streak. We're looking for day one of a rally attempt for the S&P 500 and NASDAQ. Let's start by taking a look at the NASDAQ composite here. Let me go ahead and refresh the chart for those of you watching in Tiger TV. We'll see the composite is still stuck underneath its 50-day moving average here. Really can't get out of its own way. Not surprising since the Cisco's taken a hit today on a weak outlook, but the composite right now is well off its highs, actually trading in the bottom half of its range now. It's only up a fraction, about 44 cents, not even one point, to 29.35. So NASDAQ composite having a hard time getting going here. Let's move over and take a look at the S&P 500. We'll see that this index is also in the bottom half of its trading range now, still up for the day, close to 5 points, 0.4% to 1359, also stuck underneath its 50-day moving average. And why don't we take a look at the Dow as well, Dow Jones Industrials. Right now, up about 34 points, 0.3% to 12,868, almost 12,869. So tech stocks having a tough day today, again, due to results from Cisco Systems that, the quarterly results were okay, not too bad, but it's the outlook that disappointed investors. Let's take a look at the NASDAQ 100 while we're at it. Oops, that's the composite. Let me go to the NASDAQ 100 here, and we'll see this is a troubled index as well. The NASDAQ composite still looking for day one of a rally attempt here as well. It is actually down today, down a little more than 4 points, almost 0.2% to 26.17. Let's check in on shares of Apple today. A lot of buzz around Apple. A few rumors out there. It's going to introduce a smaller version of the iPad, maybe as early as early next year. Maybe a little cheaper as well, but Apple is still a very troubled stock here. There's no question about it. Lots of institutional selling in Apple recently. Really no conviction at all behind the buying. When the market does rebound and when new leadership starts to come into focus, I'm really not expecting Apple to be one of these leaders. I'll say that. I'll say that right now. Huge run for the stock huge run for the stock in this area here. It's in the process of basing right now, and it's hard to say why all the weakness. I mean, it's easy to say institutional investors are taking profits in the stock. I don't think there's any question about that. There are maybe other concerns out there about slowing growth, and I think those are legitimate concerns, even though Apple over the past several quarters has really done a tremendous job growing the bottom line and the top line. Apple is technically very weak, a stock that clearly is suffering from pretty massive amounts of institutional selling and really not much conviction behind the buying either. So its downtrend looks intact for now. Let's also take a look at shares of Intuitive Surgical. This is another NASDAQ 100 component that actually is holding up okay. I mean, one of very few stocks out there still holding above the 50-day simple moving average, but Intuitive Surgical is doing that. It is up $6.73 today, 1.2% to $556.32. So Intuitive Surgical still intact here. Let's go back over. I wanted to mention one thing about the NASDAQ composite, and if you've been listening to the show, reading my my writing in recent days, really the NASDAQ composite, the line in the sand here is this 2,900 level that was set back in early March. Really, interesting. Tuesday and Wednesday this week, the composite actually hit an intraday low of 2,900 both of those days. So that is really the level to watch here. If it undercuts 2,900, which I suspect the chances are better that it's going to than not, I'm really not expecting a long, drawn-out period of selling. I do think it'll be the shakeout that this market needs before new buyers come in. So if we do undercut 2,900 on the NASDAQ, I think it'll be a scary shakeout, but wouldn't be surprised to see a buy signal from the market in the not too distant future soon after that. So let's see how that situation plays out. What I know right now is that the risk still outweighs the reward in this market. It's a big reason why my Ultimate Growth Stocks model portfolio is still favoring a pretty big cash position here. I currently have 5 open positions. I'm willing to give those positions a little more time to work. I like the stocks that I own, but they are small positions, and I am favoring cash in this environment where growth and aggressive growth are generally out of favor here. And that's an important thing to remember as an investor. You need to be able to identify periods of time where the market tide is flowing positive, and you need to be able to identify periods of time where the market tide is flowing negative. And clearly the market tide started flowing negative back in early April. That's when I really started to see the first signs of mild institutional selling in the major averages, and as a result I started taking profits and just taking a much more defensive posture with the portfolio. So basically in capital preservation mode here. A buy signal is going to come at some point. I don't know when that's going to happen. I'm basically going to let the market tell me when it happens, and then I will start to move back in slowly but surely and see how things go. But just like we're watching 2,900 on the NASDAQ composite, we're also watching 1340 on the S&P 500. That was also the low set back in March 6th, I believe it was, early March. But watching 1340 for the S&P 500, same situation. Could see a shakeout below 1340. And we'll see if buyers come in soon after that. So that's what I'm looking at right now. In terms of volume in the market, it's been heavy to the downside, no doubt about it. And at one point today, taking a look at volume on the NASDAQ, was tracking just a little bit lower than what we saw on Wednesday, so not seeing a lot of volume in the market today. And on the New York Stock Exchange, tracking about 15 to 20% lighter than what we saw yesterday. NYSE volume on Wednesday above average at 933 million shares. NASDAQ volume on Wednesday also above average at close to 2 billion. So tracking slightly below 2 billion on the NASDAQ today, and on the NYSE quite a bit, 15-20% below that 933 million level we saw yesterday. All right, IPO news. Let's take a look at ADNC. That company started trading today. I'll show you the chart. Just going to give me the pricing information. It's not going to really show me a chart, but the firm's name is Audience. It's a fabless company, which means they design the chips and then they have somebody else actually make the chips, but they do design audio chips for use in the iPhone and other mobile devices. The company raised $90 million by offering 5.3 million shares at 17. That was above the proposed range of 14 to 16. What's the stock doing now? It's up $2.55 to $19.55, so a good first day of trading for ADNC. A bunch of IPOs set to come public this week. We have 12 in all. Another one that looks kind of interesting, Ignite Restaurant Group, hasn't started trading yet, hasn't priced yet, but that's going to trade under the ticker IRG. Ignite Restaurant Group, they operate Joe's Crab Shack and Brickhouse Tavern and Tap. Company plans to raise $75 million by offering 5.8 million shares at a price range of 12 to 14. You know, it's interesting. We have the Facebook IPO that is waiting in the wings here. I think it's going to price May 17th, start trading May 18th. I'm not sure those dates are definite, but I think that's the case. Right now, an expected range of 28 to 35 could give it a market cap of up to $95 billion, but it is interesting. I mean, you got to think that Facebook, are they questioning the timing of this IPO? You know, you've got sell in May, go away. That clearly has been happening pretty much for the month of May. And are they going to bring this company public during a time when clearly selling pressure is building in the market here? So it's just interesting. We'll see if the IPO stays on its the current schedule. Again, it's supposed to price May 17th and start trading on May 18th. We'll see how that goes. Taking a look at gold and oil today. Gold up 0.1% to $1,595.50 an ounce. Let's check in on the GLD here, the Spider Gold Trust. Always take a look at that. That trades at 1/10 the price of an ounce of gold bullion. Hit an intraday high of 155.57, trading near its low now, 154.84. That's up only 37 cents. A lot of people looking for gold to bottom here. We'll see if it does. We'll see if it does in the near term, but certainly a lot of heavy volume selling in the GLD. That's for sure. Dollar index looking to extend its winning streak to 8 sessions, but right now it's looks like the U.S. dollar index is about unchanged at 80.08. Let's take a look at this U.S. dollar index. You'll see once again that I did plot a descending trend line here, and here's the U.S. dollar index. This is actually, is this? Yeah, no. This is Wednesday's close, but at 80.08, and it's trading at 80.08 right now, unchanged on the day. But you can see the descending trend line. You did have a technical breakout in the U.S. dollar index. From here, it's going to just be important to see if it can hold above this $80 level. If it does, it probably will indicate higher prices ahead. But if you get weakness in the dollar and it breaks below that descending trend line again, once again, its uptrend is still in question. But what we know right now is a breakout for the U.S. dollar index. It tried to break out, what was that, on Tuesday, reversed, finished near its session low, tried to break out on Tuesday, I should say, and then a breakout on Wednesday. So that was actually Monday where it reversed, finished near its session low. But you got a breakout in the greenback, which could be problematic for stocks. All right, folks, headed into the first break. You're listening to Breakout Investing on TFNN. We'll be right back.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Folks, a reminder, I did a webinar over at TFNN, Portfolio Strategies in an Uncertain Market. Last week, I believe it was May 2nd, but either way, you can go to the homepage of TFNN.com. If you missed the webinar, you can. You'll see it in red letters, breaking news right on the homepage. See Ken's webinar archive now. So if you missed it, be sure to check that out. And also in the carousel right on the homepage, the summer silver giveaways picking back up soon. TFNN and Great Panther Silver are giving away 1 ounce of pure silver every market day during the month of June, so be sure to register for that. Registration is fast, easy, and free right on the homepage of TFNN.com. All right, a couple of earnings reports, high-profile earnings reports we want to talk about today. Let's, Tiger TV, let's take a look at a daily chart of Priceline, former holding in my Ultimate Growth Stocks model portfolio. I'll show you exactly where I sold it. I went over this on the webinar last week, but saw a couple of big, heavy volume down days for the stock after a nice uptrend. Decided to take profits. Stock came down to its 50-day moving average, started to rally back up, started to regret taking profits. But anytime I take a profit in a model portfolio stock, or I issue a sell recommendation telling subscribers to book profits, I'm always making that decision based on available information at the time. So bottom line is that you did have signs of institutional selling in Priceline. Institutions are definitely in the stock today, selling shares. The online travel firm is currently down $32.74, about 4.5% to 686.21. 686.21, the last price on Priceline. Even with today's decline, it's not that outrageously expensive a stock. It's selling at 33 times trailing earnings and only 17 times forward earnings. You had earnings per share up 61% to $4.28. That was well ahead of expectations. Sales growth was pretty much in line, and that's kind of a problem when you're a high growth name like Priceline. Sales were up 28% year over year to $1.04 billion. Second quarter outlook a bit light. Nothing surprising there. Like Apple, Priceline tends to lowball estimates. But bottom line is you got a big wave of institutional selling in the stock. I think the risk outweighs the reward here, and I do not believe that Priceline is on sale here. Take a look at some other online travel firms that recently reported outstanding results. You had Expedia. I still like the way this stock looks in this market. Technically still holding up quite well. You can see a big gap up over here when it reported earnings. It is trading tightly, holding gains smartly. Shares of Expedia right now only down 16 cents to $40.98, only down about 0.4% on the day, but that stock continues to trade well after reporting nice earnings. And let's take a look at TripAdvisor. TripAdvisor is a recent spinoff. Expedia spun off this company not too long ago. I remember just recently got a call from Greg in LA wondering what to do with this stock. He decided to hold it through earnings, and that was a good thing he did, because you had a big gap up, just like Expedia when TripAdvisor reported earnings right here. Another stock, it hasn't technically filled its gap yet. It may not, but it is still holding above its 10-day moving average. That is a bit of an anomaly in a market like this that has been under distribution, but TripAdvisor still trading pretty well as well. But Priceline not looking so good after reporting earnings. And let's take a look at Cisco. Really tough day for Cisco Systems. Here's a company with a market cap north of $100 billion that is, trying to reinvent itself, trying to restructure, trying to get back up on the growth path. But they'd had a cautious business outlook, some slowing revenue, softness in Europe. They made 48 cents a share. That was a penny above the consensus estimate, up 14% from a year ago. Sales up 7% to $11.6 billion. A little bit of a deceleration from the prior quarter, and but the results, the sales results, were mostly in line with expectations. Switching and routing products make up about 50% of total revenue at Cisco. But some of its smaller businesses doing okay. Their data center business, a very small piece of the pie at this point, did show strong growth, up 68% year over year to $291 million. But it did show growth in its wireless segment as well. But still, shares of Cisco really getting creamed today, down $1.94, near its session low, a little more than 10% to $16.84, and big break below the 200-day moving average. Broken stock. Man, I would avoid this one. All right, folks, coming right back after about a 3-4 minute break. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. 25 minutes left to go in Thursday's session. Indices kind of petering out here as we head into the close, giving back early gains. Dow right now up 30 points, 0.2% to 12,864. NASDAQ Composite up fractionally 0.5 point to 29.35, and the S&P 500 up close to 5 points, 0.3% to 13.59. Mentioned the Ultimate Growth Stocks newsletter and model portfolio. Folks, if you want to get a 30-day free trial to Ultimate Growth Stocks, it's updated every Tuesday. I mentioned I have 5 names in the model portfolio right now. Notice that 3 of them today are up 1.4% or more. Got one that's up 1.4%, one up 1.5%, the other up 1.7%. So a pretty good day of outperformance for the model portfolio so far. Still definitely favoring a cash position right now. I think one of the big mistakes that investors can make, individual investors, they're invested in stocks when they should not be invested in stocks. And when you have a market that's been under distribution for a little while, not sure where the bottom is, that is not the time to be buying stocks. It's sort of you're buying during a negative market tide, and that's just very difficult to make money in an environment like that. And in fact, the chances of losing money are heightened, and that is why I'm favoring a pretty high cash position at the moment. But buy signal is going to come, and new leaders are going to come at some point, and rest assured we will be ready when that happens. I wanted to take, I think you're still showing Cisco Systems in Tiger TV. I showed Cisco before we went to break with the 10-day, 20-day, 50-day moving average plotted, but I mentioned that Cisco had plunged below its 200-day moving average today, a longer-term support level, and you can see Cisco recently broke below its 50-day in heavy volume, and stock just getting creamed today, now down 10.5% to about 1681. Big gap below the 200-day moving average today. So definitely a broken stock. I would not look at it as on sale here. Some good stories on the earnings front. Let's take a look at Monster Beverage. Of course, Monster was rumored to be in talks with Coca-Cola. Coca-Cola was apparently interested in buying Monster Beverage. They said that is not the case. You can see shares of Monster back here hit an intraday high all the way up over 82 and then closed all the way down near its low. But good earnings from Monster Beverage. The stock right now, big gap up, but trading near its session low. Still up $6.20, 9.5% to 71.51. Earnings up 41% from a year ago to 41 cents a share. Sales up 28% to $454.6 million. So nice numbers from Monster. And then a very speculative name here. Boy, this company does make some nice looking cars, though. Tesla Motors, electric car maker, their Model S. Highly anticipated, is going to be released a little earlier than expected in June. The company expects to be able to deliver 5,000 Model S sedans by the end of 2012. Reservations for the sedan have topped 10,000. So Tesla Motors up 10.5% today to 33.24 on the news. Again, this is not a base breakout for Tesla Motors. This is a stock where obviously a lot of buyers in there today, but still to me looks like a broken stock technically. I can't say that its technical picture has improved all that much today, despite a nice price gain. Still a stock that is basing, and let's see if it can start to slowly but surely retest its former high, just over right around $39, $40 a share. So one day of strength in heavy volume does not a new uptrend make. Good day for Tesla Motors today. Still looks a little bit broken here to me. Let's take a look at Ulta Beauty, ULTA, Ulta Beauty. Really well-run retailer here. Like Ulta a lot. Used to be called Ulta Salon Cosmetics and Fragrance. That's a mouthful, so the company recently changed its name to Ulta Beauty. This is a stock that still looks a bit troubled to me technically. Lots of sellers in the stock, but earlier this week, interesting news from Ulta. They announced a secondary offering that caused a big sell-off in the stock. When was it? On Tuesday, I think it was. Heavy volume decline. Stock did manage to finish up near its high, but on top of the secondary offering news, the company also raised its earnings outlook. They're going to be coming out with earnings in June 5th. They raised their outlook based on higher traffic at their stores. Great track record of execution at Ulta Beauty, but they did price 7 million shares today at $84 a share. Demand is pretty good. Stock is up $1.53, 1.8% to $85.80. This is a tough one to bet against. It's not at a buy point right now, but it is a great management team here, great track record of execution. When they do report earnings on June 5th, earnings are supposed to be up about 41% year over year to 52 cents a share. Sales up 22% to $469.7 million. Let's take a look at Cerner here. This is a stock that I flagged in my newsletter. Possible buy going forward. I really like this name a lot. Going to be looking to add some new names to the model portfolio. Really like Cerner a lot. Like the way it's trading. Stock is up 34 cents today, 0.4% to 79.24. You can see it's a big move recently on strong earnings. Cerner is a healthcare IT company, basically caters to hospitals, healthcare providers. They provide clinical, financial, information management tools to help hospitals and healthcare providers operate more efficiently. Earnings, when they did report, just very consistent earnings growth at Cerner. I like to see that. When they last reported, earnings were up 35% from a year ago. Sales growth accelerated, rising 30% year over year to $641.2 million. So another well-run company here. Let's also take a look at Penn National Gaming. Haven't talked about this one very much, but like the way this one looks technically. Now, when you're in a market downtrend, stocks with strong charts, they try to tempt you. Typically, new buys should be avoided in this type of market environment, even stocks that are acting well technically. Shares of Penn National Gaming today up $1.39, a little over 3% to $45.56. See, it's back above its 10-day moving average here. Earlier in the week, Penn announced plans to acquire Harrah's St. Louis. This is a gaming and lodging facility in St. Louis, of course, formerly operated by Caesars Entertainment. I think Penn said that this was an acquisition that was going to be accretive to earnings. So Penn acting very well. Let's take a look at a weekly chart for Penn. Just get a different perspective from the daily chart, and you'll see actually a nice technical setup here. A breakout a few weeks ago from a bullish cup with handle base. Here was the start of the base here. You've got your U-shaped structure, then a little bit of a shakeout here, and then boom, heavy volume breakout a few weeks back, and it is firming up nicely at its 10-week moving average. So like Penn National Gaming's technical picture, quite a bit. Doesn't show the the huge earnings and sales growth that I typically like to see in a company, but just wanted to point out the chart as an example of one that is pretty darn healthy in this market environment. Over the past 4 or 5 quarters or so, top line growth at Penn has been in that 10, 12, 13% area. So good growth, but not super fast growth, but pretty good company here. Let's also take a look at CPA, which is Copa Holdings. This is an airline based in Panama. They offer service to North America, South America, the Caribbean. Another well-run airline here. We've talked about Spirit Airlines, SAVE, in the past, company airline that also has service to the Caribbean, but CPA having a big day today. Stock is up $7.61, almost 10% to 84.84 is the last quote for Copa Holdings. And what you have here is earnings up 10% from a year ago to $2.04 a share. Sales up 29% to $543.3 million. Stock took out a swing point today of 82.89 in very heavy volume, which is good to see. The issue I have with Copa, though, there were, before today, Monday, Tuesday, and Wednesday, you had some pretty significant distribution in the stock. So investors apparently had it raw. Maybe there was some apprehension ahead of earnings, but the stock did take out its 50-day moving average yesterday. Numbers are pretty good, so the stock is breaking out today in heavy volume. I don't know if I saved a weekly chart for Copa. I'm not sure that I did. Let me see here. Copa. Yeah, here it is. Let's see if it's well, that's not it. But you can see the having a Copa really strong day for the airline, and a big breakout over 82.89. Again, breakouts are tempting in down markets. You say, well, this stock is acting well, I'm going to buy some, but generally the risk still outweighs the reward. Hard to find technical breakouts that are really working in this kind of environment. Let's move on. Take a look at Seagate Technology, another name, hard disk drive maker, acting very well in a weak tape. Shares of Seagate up 99 cents today, 3.2% to $31.56. Stock that just is, it's just continuing to act right during a time when a lot of growth names are violating support levels, showing a lot of technical damage, really not seeing any of it at all in Seagate. This one still looks like it has the potential to lead when new money comes into the market. And another chart I like here, Titan Machinery. When it comes to agricultural construction equipment stores. Tractor Supply, TSCO, tends to get a lot of print. It's the bigger company, market cap of about $7 billion at Tractor Supply. I like Titan Machinery a lot. It's a lesser-known name in the space. It has a market cap of less than $1 billion. Company still in the early stages of growth, though. Titan Machinery, ticker TITN, up 26 cents today, 0.8% to 33.73. Also, like the fact that this stock has been holding gains nicely, basically moving sideways, still holding well above its 50-day simple moving average. So Titan Machinery, another stock acting pretty well here. And finally, in terms of the gainers today, stocks acting right. Let's take a look at a name that I haven't talked about. I know that, Mattress Firm Holding. This is a company that had its IPO in November at $19 a share. These mattress makers have been under quite a bit of pressure. It started on Monday. Tempur-Pedic, TPX, said it planned to discount its Cloud Supreme mattress. That just kind of raised competition concerns, but the mattress makers have been under quite a bit of pressure this week. Not only Tempur-Pedic, but Select Comfort as well. But Mattress Firm Holding firming up today, no pun intended, up 1.5% to 36.15. You can see this is in the process of basing and consolidating gains. So this one's going to have to prove itself a lot more for me to believe that a new uptrend is about to start here. There's still going to be a lot of overhead supply, overhead resistance as the stock tries to work its way higher. You could see a base eventually form here and an upside breakout attempt, but it's still very early in the game for Mattress Firm Holding. That said, let's take a look at Select Comfort. Select Comfort, doesn't look nearly as good as Mattress Firm here. Select Comfort down 1% today to 27.02. Another stock that's really been hit hard by institutional selling here. So Select Comfort, a shadow of its former self, and Tempur-Pedic, which, by the way, has really, really comfortable mattresses, I must say. This is a stock that's just been obliterated, really starting in April. So this is one to avoid. Out of all the mattress makers right now, I would say that Mattress Firm Holding looks the most compelling, but again, it's still in the early stages of building a base here. Let's see if it could complete a proper base, and then we'll possibly see a buy point. Overall, though, a lot of technical damage in this market still. A lot of your leaders in the first quarter have just been really killed. Some of these stocks are going to come back. Others are not going to come back. Let's take a look at Salesforce. Salesforce actually reports earnings next week, I believe. May 17th is the earnings date. Let's see if we can get a quote for CRM. Here it is. Salesforce, really in tough shape here. Stock is down $12.93 today, 8.7% to $136.05. Pretty shaky price action in CRM over the past 6 trading sessions. Really getting killed today in huge volume. Not the best of signs ahead of its earnings report May 17th. Earnings are expected to be up 21% to 34 cents a share. Sales up 34% to $678 million. So Salesforce.com, a big leader that's in a lot of trouble here. When we come back, folks, we'll take a look at VMware and F5 that are also under quite a bit of pressure today. We'll do that in about 3 to 4 minutes. You're listening to Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Go get them, folks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN as we head into the close here. Indexes pretty much giving back all of their gains today, not the best of performances. The Dow is now pretty much unchanged at 12,835. The NASDAQ is now down close to 7 points, 0.2% to 2927. And the S&P 500 up a little more than a point to 1356. Had a nice open, some positive headlines out of Spain, at least that they're partly nationalizing. What is it? Their fourth largest lender in the country. So that was good news out of Spain. Bond yields lower on that news. We had weekly jobless claims today, down 1,000 to 367,000. That was mostly in line with expectations. Economic data tomorrow. We've got latest reading on wholesale inflation. Producer price index is expected to come in flat, with the core rate up 0.2%. Michigan consumer sentiment survey will also be out tomorrow. First reading for the month of May. today it's expected to fall just a little bit to 76 from April's final reading of 76.4. Before we headed into the break talking about price destruction in Salesforce.com today. We'll update that. Boy, stock is really getting hit hard. This was a stock on my watch list not that long ago because it looked like a breakout was taking shape, but it was trying to do it in a very unsettled market. So not all that surprised to see its weak price action, but you can see a big reversal right here, and then the stock down 9% today to 135.20. Other names under pressure here. Let's take a look at VMware. This is a software virtualization company. It's getting hammered today, down hard, a little over 4% to 101.02. No news that I could find here. Just more institutional selling, and then F5 Networks, probably riding the coattails of Cisco lower here. F5 Networks also taking a pretty big hit today, down 4.4% to 123.65. So bottom line, we're still in an unhealthy market here. Look like we had the chance of perhaps getting day one of a rally attempt for the NASDAQ, for the S&P 500. S&P 500 still looks like it's positive, trying to hold on here. If it does close up 1 point, up 2 points, it will be day one of a rally attempt for the benchmark index. But bottom line is, market still has a lot more work to do to prove that a new uptrend is for real. Again, watching 2,900 on the NASDAQ, 1,340 on the S&P 500. S&P 500 is still about 16 points above that 1,340 level. NASDAQ about 28, 29 points above 2,900. I think maybe a good thing for this market is that we do get one last shakeout, wipe the slate clean. If that happens, I'll stay optimistic and say that hopefully we get a new round of buyers come in after we get one last shakeout in the market. Coming up after the close, take a look at earnings from Nordstrom, JWN. Let's see what Nordstrom is doing ahead of its report. Working on a 6-session losing streak, just like the Dow. Shares of Nordstrom down 55 cents, 1% to 53.37 ahead of the results. Earnings at Nordstrom expected to be up 15% to 75 cents a share. Sales up 13% to $2.5 billion. And remember Nuance Communications, voice recognition technology, sort of the brains behind Siri and the new iPhone. Boy, is this stock just completely fallen apart. Nuance down 1.4% to 23.07 ahead of earnings after the close, and a whole bunch of retail earnings reports next week as well. So busy week of retail earnings next week. Coming up next, the Tom O'Brien Show on TFNN, 4 to 6 Eastern. Next edition of Breakout Investing will be next Tuesday. Have a great rest of the day, everyone. Talk to you soon.